Okay, everybody, welcome. Good morning, America. Good evening to my European friends. Late start today. You get coding on one thing and then you just go crazy. Next thing you know, it's morning, New York time. Even though I planned on recording about 5 hours ago. It's not going to be too long of a stream today, but I got some good charts, I think, to send you guys into the weekend. I've shown this on and off. I finally got it into my new charting software. All right, $21 trillion, Magnificent Seven. Still amazing how you can see the change even from less than a year ago, Liberation Day. A third lower. Really remarkable. We'll look at regressions here as well compared to Bitcoin. But just to show you, how quick things change. Obviously, all of these stocks are highly correlated to the AI trade. Although I do want to show you some other, or I plan on making some other indexes that are maybe more correlated to the AI trade, but in any event, it all started here, right? Mark Zuckerberg's metaverse was failing, and all of a sudden, ChatGPT basically allowed all these companies to go 3x. It's pretty remarkable. Of course, other AI companies came on board here, but the chip growth for NVIDIA, everything you can see, it's pretty amazing. So the start of 2023, only less than $7 trillion market cap. And just going back, again, this is exponential growth, just like many things in the market. So though it looks insane, this is actually just a normal chart with exponential growth, right? So I could go all the way back here. See, looks the same. I can take the next peak. We're not even really the peak, but we go all the way here. Looks the same. There is an interesting fall from 2000. And notice how we start to lose stocks here, right? Tesla wasn't around. Facebook wasn't around. I do think this shows how huge the dot-com boom and bust was relative to sort of exponential growth, right? Because it's just this period of the 90s was extraordinary. And this is just Microsoft, basically, that's exploded. But you can see the fact that Microsoft is so peaked here compared to, here and all the others. And the rest of the chart, when we were looking over the longer term, shows just how huge relative to the past the dot-com boom was. And then, of course, you get back into the 90s and the 80s, and it's only Microsoft and Apple, and Microsoft is massive compared to Apple. Pretty interesting. In any event, it's volatile. It's just as volatile as Bitcoin. Although if you hold, like with Bitcoin, you will get good returns. I wanted to show a regression. So let's, you're cherry picking a little bit, but let's start this regression here. which is the same time that Bitcoin started. So this is when I start this chart, just to show you. We'll forget the projections, but we'll just go here, okay? Start year end 2008 is the total market cap, simple regression, exponential. Like I did yesterday with the Bitcoin CAGRs, with Bitcoin CAGRs, just to show you the importance of holding on, right, for like a year, even when we go in these down markets, which I'll show again. But with the importance of to see how quickly these CAGRs can turn around, they work the same here, although they can even turn around, let's say, quicker. So if you know, this is a big Facebook drop here as well. Like, let's just remind ourselves what happened again. Facebook, as an example, it was $1 trillion here. All right, Meta, it's $1 trillion, 900 billion here. They were all big. Everything was coming down after the silly season meme stock trading, but the metaverse had a big drop. Went down to 300 billion. Apple was 2.4, 2.5. Actually, no, did it go to 3? Actually, it did get close to 3. It went down to 2.1, so whatever, a third of a loss, but Meta had a huge loss. Anyway, let's just use this as an example now. So I'm going to show you the CAGRs. First of all, no complaints. If you had these, this is your portfolio. It's pretty good, all right? This is since 2008. X equals 1. Regressions have numbers behind these dates. So X equals 1 is 2008, December. If you just connect the dots of the green to the green, wherever the green starts and the green ends, gives you this 27.7% CAGR, pretty good. If you say, okay, we can't time the market, but generally we're going to be around this black line, which was the OLS trend, ordinarily squared trend, 26% CAGR, pretty good. 99% R squared. So nothing to complain about holding tech stocks. But then even just to show how much better you can do, watch if you bought this dip where you got at an extreme low. Well, let's just analyze this again. All right, so I need to get the multiples here, but this is based on the multiple of the trend. Okay, so the trend is 10 trillion. The Q0 is 6 at this point, 6.6. So you're 40% under trend. All right, that's being 40% under trend is worse than any of these relative to the trend in the past. That's why this is like a squiggly looking line in the past and not these smooth quantile lines. And this works better with exponential than it does for power curves. In any event, let's cherry pick, say you got the worst price, and then just wait until you get back to trend. All right, that's it. Just waiting from the worst, okay, see right there, to getting back to trend. Okay, and you don't even get back to trend, but still it's going to be good. What's our CAGR? 70%. That's not 70% gross. That's 70% per year, which is basically actually a year in this case because we started it in January 2023, and I'm finishing this in March 2024. Did I say January? It is January, right? Yeah, January 2023 to March 2024. So year and 3 months, but annualized, stretched out, compounded to a figure that investors understand, 70% CAGR, enormous. And all you had to do was understand where the price was relative to the trend. Again, this is a not financial advice podcast. I'm just showing you the fun. of looking at markets this way. All right, and you only had to wait, right, this long. And if you waited, you know, whatever, if you decided to buy here and you did, and you waited till today, we go here. Okay, again, say you bought right around there. This means you buy all the stocks in the Mag 7, right? Actual market cap 6.8 trillion. Today 20.7, CAGR 41.8. Okay, so it's less because it's a longer time, but it's still an enormous return. This is a Bitcoin-like return, by the way, 42%. So that's fine. And this is, you know, these are the best stocks, blue chip, a lot of institutional backing, you know the drill. But it can be helpful to look at things this way. And then if you see, okay, well, this market seems so hot right now because of all the AI hype and also the cost of data centers and all the rest. Well, where does that put the price? Interestingly, about on trend, not even as heated as compared to here. Now, if I were Jim Simons, rest in peace, you know, type investor, very sophisticated, using all these statistical models, yeah, you could draw, you know, a new trend line from right here. You'd see this is even faster than here, and you could try to time it all that way. I'm not interested in doing that. I'm just more interested in seeing what are the returns like over sort of a mid to long-term period of time, and how might that compare to Bitcoin? And the answer is it's still pretty good for these stocks, right? And another thing to take away from this is that even extreme volatility, based on the last 15, 18 years worth of data, even with extreme volatility, getting to the lowest quantile is only a 40% drop from the trend. Quote, only 30 to 40% drop. Right, because this is a really closer to a 30, 35%. But this is just a good example of buy and hold, and you know why that stuff can work. Okay, so good returns all around, and this is an exponential trend, so it actually grows faster than Bitcoin eventually. But that's a big question for the future. I'm not sure if I'll get into that in this show. But now, let's look at the old Bitcoin power curve. You should notice there's a major difference here. Let's ignore the squiggly lines because I know that's kind of another layer of complexity. But if you just look at this line on a log scale, and then you look at this line on a log linear scale, they are different. All right? They're just clearly, obviously, drastically different. One is a curved, nice sort of gentle curve. The other one is a straight line. There's just no getting around it. This is 98.7% R squared for the Magnificent Seven, and any stock would give you, it's not going to give you that high in R squared, but it's going to give you good R squareds. And Bitcoin with this is a 96.1% R squared on this curve. If you shoehorned in a exponential, you would also get a way lower number, like 86% R squared. It's clearly not doing exponential. So that has different implications, but again, in moments like this where we are at extreme lows, and here I'm going to have the quantile, which is a slightly different regression than getting the squiggly lines, right? The sort of, you know, not smooth lines in the past. The point is, this works for exponential. It doesn't really work as well for power, although I know I've shown it plenty of times. Now I'm showing the quantile only, which gives you the smooth lines, which is probably better for a power curve. It is better statistically for sure. In any event, look where we are. Look where we are. We're at the 0 right now. We're denying it. Plenty of YouTube thumbnails saying if you don't watch this video, your life will end. And also Bitcoin is going to be $20,000, $30,000, whatever. Anything can happen. But if you trust the trend, and I know don't trust verify is a good mantra for the Bitcoin space, but if you do have some faith in the numbers, when you put this on log, you should get some comfort. You really should get a lot of comfort. Because when we go log with a power regression, we get a straight line, which we only need to go log linear with an exponential regression to get a straight line. Stocks, bonds, GDP, population growth worldwide, they all do this. Bitcoin, extremely unique, does this. So I did this again. I did this yesterday. I'll do it again just to compare. Let's put the 10th. Okay, so if you consider just consider what the numbers are saying. Let's go back to this. Relative to the trend, the way these curves play out relative to the trend, if you get down to these levels, then it means, statistically speaking, the price would be above or below that level X% of time. So this red line, you're below this price 99.99% of the time. That's literally the numbers I'm using. 99.999. And for this one, Q0, if you ever hit this level, you're literally, price has been above this 99.999% of the time, or it's only been below it 0.0001% of the time. And this one, Q10, means, statistically speaking, 90% of the time the price is above this level, 10% time below it. So in other words, anytime you're between these two bands, it's extremely rare. We had it with the scam Bankman fraud, FTX vomit in November 2022, and we have it right now. And then echoing a good comment that I got on YouTube 2 days ago is, okay, so show us what that could mean for the future. And of course, we can look at the trends. That's fun to look at the prices, what they are, but let's just look at the returns. So last time, right, my favorite time, you know, I like to talk about this, when Peter Zion was on Joe Rogan right around here, saying that Bitcoin was $17,000 overvalued when it was trading at $16,000, thinking he was a clever guy. This was statistically the low point for Bitcoin relative to the power curve. So if you bought at any point, but let's just say you bought at the worst, earliest point right here, okay, and then just waited until we got back to trend. Let's do the same exercise as before again. There's your CAGR. You buy at 15K, get back to trend around 62K. It's really 63, but who's counting? It's a 184 CAGR. All right. And how long did that take you? Right, November 2022 till March 2024. So 1 year, 4 months. I think we could be quicker this time because we've had such a quick drop, right? Remember, if you assume the 4-year cycle is on, and by the way, I don't assume it's been invalidated. I've been surprised to learn some other people think it has been invalidated still, but talk about that later, maybe. But, you know, notice 2022, April, May. It took all the way till 2022, May. If the peak was in last 2021 when it was above 60, okay, and there were 2 peaks, remember. It took all the way to May to get under the trend. Here we are, right? Assuming the peak was, as it clearly was the peak in October 2025, all right? So the 4-year trend ended, 4-year cycle ended. We were under trend already last year. Here we are in February, let alone May, and we're bouncing along the 0th percentile. So, in other words, it was extremely quick down compared to any prior cycle. The same thing was here. It took a year. Same thing was here. It took like 2 years, really, to fully bottom and get out of that crypto winter long one. So, point being, because we're so quick to puke out here, I do think, especially with all the institutional involvement, we could get out of this faster. But time will tell. And again, this is not a next day fast money podcast. This is just to show you the trends. So let's imagine here, even though we did have the scariness of the 2020 madness here, from the old 2017 cycle, we puked out here, December 2018. Let's say you bought the dip and then just waited to get back to trend. All right, you bought the dip in December 14th, got back to trend. May 2019, that's 6 months, 627% CAGR. All right, so think about those returns. Now it's a power curve, so they're going to get gradually less every cycle, as you can perhaps surmise. But still, think about those returns with Bitcoin compared to these returns, even timing the bottoms of these Mag 7 plays. Like, for example, say you timed it here back to trend and then you dipped, but let's say we just didn't dip or whatever. All right, it's a good catch. Still 87% CAGR. Great CAGR, but not what we're talking about with Bitcoin. So again, this is what this analysis is for. I can't tell you timing, I can't tell you when, but I can tell you how risky relative to the past the asset is looking. And this is, relative to the data that we have, this is how it looks. Could Bitcoin collapse to 30,000? It's possible. But statistics would show us it's quite unlikely. Let's look out for fun. I can't do this into the future, it would be good, but even we can just, because I can't show you, say you bought the price now and then waited till trend. I just don't have that built in the software, but maybe I could do that in the future. But regardless, say you even bought the trend, which is way more expensive than the actual price, and waited 2 full years. All right, so the trend price right now is 130. Okay, right now. Bitcoin power trend is 130K. We're way discounted. If you just wait a year and a year and 10 months. Trend is 234. Okay, and what's that? All right, this doesn't make sense, ignore that, but here, OLS, 37% CAGR. But of course, if you buy down here, and then we assume in, a year, year and a half, maybe even 6 months, we get back to trend, which is totally possible, then you're talking about those crazy 100+% CAGRs. Does that make sense? Anybody have questions? This is a rapid fire stream today because I'm probably not going to go over an hour, but all right, this one, showed before many times, Bitcoin Lab, you can get this data, or at least find most of it for free. Some of it you need to pay for. It's a good site. This is pieces of Bitcoin. Pieces of Bitcoin, basically how many, one Bitcoin can be broken up into 100 million units. These are all the different pieces of Bitcoin, all the UTXOs. Not at an all-time high UTXO. They usually consolidate at highs, as they did here. Then they start growing again. That's all fine. But as I turn this one into percentages, which is going to make a little bit more sense, look at these hodlers in profit versus hodlers in loss. Okay. So when we're at, you see it's hard to see the price there, but it's in black log scale. When we're at all-time highs, everybody's in profit, literally. And when we are bottoming, everybody's in loss. So here it was 90-10. Here it was also 90-10 back in 2012. And then here it was 50-50 or a little bit more than 50% stayed in profit. At the worst, right? Here it went basically 50-50. Now, still 70-30. So do I think that we go all the way back to 50-50 or 40-60? I don't know. But for sure, as you see here with the history, most long-term UTXOs stay in profit once you've been long enough. Right? Once you haven't moved coins long enough, you stay in profit. But I think clearly, as the 4-year cycle is intact, as far as I'm seeing, we're going to have to see more red. Let me even take off the short term just to sort of, this even makes it clearer, right? Just looking at long-term UTXOs. We clearly start to bottom and don't go up until, a lot of this red gets sort of, I'm trying to describe this the best way. We have to go through some pain here. Does it mean we have a deep long red period where it goes down to 50-50? I don't think so, but 40-60, maybe. So I know I've shown the same charts a lot the past couple days, but I think it's helpful during these trying times for many. Don't get too excited if the price is bouncing up $1,000 and this or that person's talking about Bitcoin. This is the story at the end of the day. All right, here's the old projection. It's a fun one, right? I've shown this a lot. The flatter this is, the better the power curve is. So at the beginning, nobody knew this was a power curve. Tro low, low, low on Bitcoin Talk thought it was a logarithmic curve, which also made sense. Those explode even faster than power curves at the beginning. Power curves more gradual, slower adoption. In any event, it started to shake out and be correct around the end of 2016. But it has, even from 2016, you can see it's dipped lower. Okay, to where these things meet. Today, we're at a power curve of 130. All right. 67.5K in my model. Have not even looked at the price recently, if it's pumped or dumped, whatever. But just to remind you, that's actually not a record low, right? Ignoring, of course, this period. But generally speaking, even though it has gone lower, it has put in lows, which is kind of, I think, an interesting little comfort zone as well. The low was here. May 2017. Which again should make you really think twice about the power curve if you haven't explored it. All right, so you see that I'm looking at the blue line now, the blue line. See how it's 123.9, 123.8? That's the low right there. Now this is just, again, remarkable. The actual price at this time of Bitcoin was $2,000. The curve, the power curve itself was $2,000. Yet back in 2017 May, it predicted the price for today, February 27th, 2026, at $123,000. Yeah, we're a bit under that right now. But it's statistically remarkably accurate. All right, around these periods, right, when the price is actually around the power curve, you can see it was even higher. Predicted 135, 132, 130. So it falls, right? It falls as we get lower and lower here. But there are plenty of periods where, we intersect the power curve. Here, 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 here. All through here. So it's pretty accurate. It's supposed to help you with Maylocks moments. So tech stocks are fine investment. It's getting crazy with government intervention into the tech world. I'm sure you guys saw the Anthropic news. There's open source AI, which can do insane stuff. It's getting crazy. But there is a big moat and a lot of infrastructure around these companies. And yeah, they do decent, they give you decent returns. And if you fall off trend, you statistically usually get back on trend. Bitcoin has, I would argue, bigger upside still, and obviously more promising potential being open source, global neutral money. But that is the statistical nature of how it looks relative to sort of established traditional financial stocks. Both can give you great returns, but so far, even here, if you assume 20, 25%, whatever is usually the returns, at least established by this trend since the global financial crisis, this thing is much higher. Of course, these fall. So this is, you can't just look at 65% and assume that's what you're going to get. It's closer to 40% at the moment. It falls, but it's still 40% is a lot more than 25%. So again, I never want to be too Pollyannish about this stuff, but look, statistically, we're in a nice accumulation zone, I would say. And if past this prologue, where it takes a year, year and a half to get back to trend, right? You buy even here. Actually, let's give it an even better return. Take a year and a half, 2 years, right? 2022 November to 2024 November, exactly 2 years actually. That's the CAGR that's existed before when we've been at these relative levels. So I would use that as a guide. Amidst all the crazy news. I will remind you guys as well, this is, if you like these charts, I do plan on getting something released here where everybody can play with and enjoy. My website's here though, porkopolis.io. You can donate my BTC Pay server. You can find all sorts of stuff about the money supply, where Bitcoin fits into it. But yeah, I'm excited to bring you, also with the help of AI, a much more global, encompassing sort of charting engine that I've been wanting to do for a long time, but AI is actually allowing me to do it even faster and better. So I'm going to get there. I'd say with at least another month, I need to sort of work through some kinks, but it'll be a lot more than just Bitcoin and stocks. It'll be economic stuff, debt, GDP, military spending. You guys know I've been showing you a lot of that stuff. So anyway, that's what I'm doing. I'm going to run for the weekend. Hope you all have a great weekend. Enjoy life, touch grass. Don't spend too much time on Twitter. Spend time with your family. Think about this when the Maylox moments come. All right. Thank you, everybody. Take care. Have a good weekend.